David, always great to have you in here. So, what do you think of the market? We inched towards that all-time high again here this week. What say you?
Yeah, we breached the 2,000 mark for the first time in U.S. stock market history. Doesn't feel much like Dow 10,000 back many years ago that I was around for. But there's lots of good things happening. One is corporate profits. We have about 99% of all companies have given their earnings report for the second quarter, and earnings are basically up over 2 times. They were estimated about 4% earnings growth. We had about 10% earnings growth. Your consumer confidence just this week hit all-time highs since 2007, pre-crisis levels. We have gas prices that are down, lowest levels of the year, which spurs consumer spending. Consumer spending is 70% of our economy. So that's the good news. The things to watch out for, as I've talked about before, is that we're way overdue for a correction. We've been about almost 3 years for a 10% correction. We're in midterm election cycles. You're going to hear a lot of chatter. It's bad for markets when politicians are talking. We've averaged a 17% correction in midterm election cycles, so I'd be careful after this holiday weekend, see what happens and see what starts talking out there, who starts talking about what. So those are things to look out for. You saw the Yellen video. That's another issue. If the economy improves, are we going to see higher interest rates? What's that going to do to the housing market? What's that going to do to the stock market? So my rule of thumb is always kind of plan first, protect what you have, and you'll probably have a better chance of prospering.
Now, I got to ask you, in regards to Janet Yellen, you just mentioned a lot of things that were going pretty well in the market, so I always like to see that. But we have a stimulated economy. How much of that stimulation has to do with the upside we're seeing right now? Do you think that we're becoming a market that would be comfortable with reducing QE3 all the way down to nothing, and eventually we're going to have to start raising short-term interest rates, I would assume? So how much of this has to do with that prop up, and how much of it do you think is a market standing on its own 2 feet?
I think it has, 75% to do with where we're at today of QE and stimulus. You're already seeing, people don't realize it, Craig, but on the 2-year bonds actually have risen. The yields have actually gone up. You're seeing what's called a flattening yield curve, which you got to watch out for. So that's happening kind of automatically. But it's going to be curious. The bond purchase program ends in October. So we're kind of going to be on our own. The one floor we have in the market still is that we basically have 0 short-term interest rates on the Fed fund side. So that really is going to support stock prices until we see some inflation, lower unemployment, or some real consistent growth in the economy.
Yeah, well, David, great information. We never have a shortage of content when you come on here every Saturday morning with the Reyes Report. Last week, we were talking about some similar things, but now the market's even higher than it was last week, which I think begs more of the thought process around, is there a correction due? So I think it's so important that our viewers here today know what that even means. If you are going to see a 10% correction or a 20% correction in the market, which seems poised to happen, well, what does that mean to you? What exactly would happen to your retirement? What happened to your financial plan if that correction were to occur? When you do a review, this is what you can find out, and David will do this for free for you as a viewer of the show, as a listener of the radio show. I sat down with he and his wife a couple weeks ago. They really create a very well-advanced spreadsheet, numbers and graphs, so you can really understand how this stuff would look. So I encourage you to go to reyesplan.com, connect with David Reyes. He's my guy, Reyes plan.com. Thank you, David Reyes. Again, great Reyes report. And you can catch David Reyes on weekdays at 6 p.m. on 1170 a.m. KCBQ. Also Sunday mornings on KFNB 760 a.m. You can catch up with David and hear what he has to say throughout the week.